Trading Market Technicals morning call video for Wednesday, October the 30th. The train is unstoppable. Dow Jones up yet again. That makes it 14 out of 16 trading days, literally straight up on a vertical line. Dow up 111, NASDAQ up 12, S&P up 9, Russell 2000 up 3, making the 33rd all-time highs this year. A little bit nuts, a little bit crazy. We are actually making new highs as I'm recording this morning. As you can see, the E-mini S&P has made another all-time high, 1771.50. What I've seen in the past, this does not end well. Ben Bernanke is going to speak today, probably going to leave rates on hold, obviously, trying to gracefully exit his tenure. But the way he's going to do this is, to me, when the markets rally this hard, this fast, and continues to make new highs with no end in sight, the market bubble is going to burst, and it's not going to end well eventually. That's the problem that Mr. Bernanke faces if he doesn't start to taper, or at least talk the markets down a little bit. Because this, to me, having this fuel running up like this is not a good sign. Not a good sign at all. Because what's happening is you're going to get all of the retail public up in here in these areas, and when the markets do break, they're the first ones to the exits and the first one to get hurt, and that's not a good sign here. And that's not what you want. This is not what we're looking for. You want a little sidestep, 2 or 3 days lower, a move higher, 2 or 3 days lower, another move higher. But when you have something like this that's straight up and vertical, and the markets continue in a pre-market and in after hours making new highs, there's a real problem here. And that's something that I personally am saying, please use a lot of caution here in these markets. We are now making or about to make another extension, a 161.8% extension. And when you have the daily, the weekly, and the monthly charts grossly overbought, you have to have caution here. I would not be just blindly going out buying the market here. That's me. My trading plan doesn't look for stocks and just keep buying. I would be very cautious here, guys. Even on day trades, when you have, and I could show you here, when I wanted to just briefly, when you have the XLP and the consumer staples leading the market, this is not a good sign. This is actually a defensive play where people and traders, investors are putting money into, and when you have the consumer staple stocks and sector making new highs and leading this market, you have to be careful. So please, just a word of caution here. Let's take a look at the new highs. Markets are making new highs, but the stocks aren't. So this is another word of caution here. Again, we could continue to run higher. We could just continue to move up, and it means absolutely nothing. But to me, this is all part of trading and technical analysis that says, okay, we are not making new highs in stocks, but we're making new highs in the indexes. There's a reason for it, and this is something that I want to point out to you. My job is to try to keep you on the right side of the trade here. Okay, stocks above the 50-day moving average. We are at all-time highs here. Again, this is where the markets generally like to sell off. VIX not going lower, that's for sure. Looks like to me people are starting to buy protection, traders, investors. So markets are sitting right here at the lows. Again, a word of caution, and of course the CBOE telling us that we have extreme complacency here. So another word of caution, guys. Just saying, please, not saying not to trade the markets. Obviously, we're here to make money, but when the markets get a little crazy, I like to take a step back, reanalyze what the markets are doing, and see where we go from here. Now, today's Fed day, so my guess is they're going to just rip the markets higher into Fed day, and anything can happen. So there's a 50-50 shot the market continues or the markets sell off. Now, and that's going to be all about Ben Bernanke and what he wants to do. Does he want to continue to fuel this market higher and continue to increase this asset bubble that we're in? Or does he at least begin to start to taper and even just talking down the markets? And that's the beauty about his job. He could say a couple of key words and the markets move lower. And this is something that you don't want to be in front of. So I would be literally today, take a step back, maybe get a couple of good trades in the morning if you can find them. That's not that overbought. I mean, because we have literally everything that's screaming overbought. Again, not a sell signal, but that's something that's not in my cards. And when you look and engage in risk here, this is something that I would literally just take a step back and see what happens today and what happens on the close today. Okay, so we have the E-mini S&P. As you can see, we just made all-time highs this morning. It's about 345 right now, 340, and we are at 1771.50. We just made all-time highs again, and we are approaching the 1.618% retracement, and that's coming in at 1781. So we're literally just about 10 handles away. We can easily get that before the opening, the way this market's been moving. 1755 would be the next really line in the sand. 1751, 1755-ish. That'll come back into the 1272 retracement area. That'll act as support. We also have the 8 EMA here. And as you can see how far away we are from the 20-day moving average. Eventually, it's a revision to the mean. It will happen. It's just a matter of when. Here is crude oil. I mentioned crude here. I said, look, you know what, for a trade, for a retracement rally, we're right at the 200-day moving average. It's another sign. Demand is slowing, but the markets continue to run up. And again, it's only based on the Fed. That's the only reason why the markets have actually just rallied here. Okay, so we have crude running lower. I'd stay away from this. I think the retracement rally you had, the 50% is right up in here, that line. We're just above it. But I think crude really needs to pop above this area here and really start to get back above it, base, and then make a return for the start making higher highs and higher lows. Otherwise, this to me is in a downtrend and will continue to move lower until we can get some sort of basing pattern here. And of course, something happens out of the Middle East that always can happen, as you can see here. But crude oil, stay away from. I never like to short crude, only because of there's so much uncertainty out there, out in this world, and crude could easily spike up, $3-4. So I'm always a better buyer of crude than a short seller of crude. And gold. Now, gold is going to move one way or the other today, and gold is going to be a huge market mover along with equities and, of course, bonds. But here I have a head and shoulders pattern in the GLD, which is the same as the daily chart of gold itself, spot gold. But we have the neckline coming in right around the 121 area. Now, we can blast higher, and I think even if we do go higher, I wouldn't be looking to short gold. We get to these points in these areas of 136, 137 area, and then we would reevaluate. We would look to see if gold continues higher or if gold stabilizes and then just breaks out of that base. Just because gold hits these areas, I'm not looking to just go and sell gold. I want gold to base and then reverse, and that's when we would get that trigger to sell gold, not because gold hits the price area where you're looking to short. So again, let's see what happens with gold today. Flat trade in gold, I would not be looking to do anything. I'm a short seller of gold at these areas, or I'm a buyer of gold somewhere around 1,000, 1,150. Okay, now let's take a look at the indexes. Really not much to talk about. We're hitting fresh highs in all of the indexes. Spiders, all-time highs here, as you can see, and continues to make new highs. We have the diamonds. Now, the diamonds didn't quite make it, but it will this morning because we are let's see, the YM future is right now trading at 15,654, and we made 15,657, and it's 15,658 is the high. So we're right there now, challenging the new highs, as you can see. So diamonds here are going to do that on the opening. So they have met its target. Now IWM, obviously the upside target would be this upper end of this trend line. And again, this is a risk-on, risk-off type. Good gauge of risk is the Russell 2000. Now, Russell seems to be literally waning here. Now, of course, with all these small dojis, it could actually just explode higher. But sitting at the upper end of the range is bullish, but it also tells me that markets are just exhausted on the upside. So a word of caution with the Russell as well. Transports, next target would be by the end of the year, would probably be this upper end of this trend line here. And this comes in all the way back down here, as you can see. Back to these areas here, way back below from the 2012 lows of that consolidation, and we just continue just to trek higher here, as you can see. And of course, crude oil being at the price that it is actually fueling the transportation sector, which obviously is fueling equities. So you can see here, this is going to be probably the next target. Maybe we come down here, we bull flag, and then explode higher into that Santa Claus rally. But you know my theory about the Santa Claus rally. We'll see what happens. Again, it is just theory, but having come in these highs and approaching strength here, it's just, to me, we can move higher, but it's just, to me, I'm going to take it one step at a time here. Just a little caution here in this market because it's a little crazy the way the markets have been acting. JP Morgan, really not doing too much here, as you can see, still within a symmetrical triangle, but barely holding. And here's another thing. The banks really aren't doing anything in this rally as well. It's just been really just the spiders and the diamonds, a little bit of the Russell and the transports. But, again, Goldman Sachs here holding up well. But I like to see Goldman start to break out a little bit here, really take out this high, and really start to hit the upper end of this target range. XLF, as you can see, another breather at the upper end of the range as well. Apple took a little dive after their announcement. And, again, we'll see. Margins were a little bit light, but we'll see if this, again, I think, you could start looking to buy this again back around the 495, 500 area with a tight stop and see where this thing goes. And lastly is the IGN, the networking sector. As you can see, left shoulder, right shoulder. Hasn't broken down yet, but it is in this area ready to, it looks like ready to move lower. But again, let's see what happens. Usually we get the breakdown and then the back test comes into a bear flag into this neckline and then move lower. But some of the tech sector really acting weak here, and that's something, again, another concern of mine. Qs, lastly, weekly shot of Qs, as you can see, upper end of the range. And then, of course, the daily, as you can see here, just way extended. And again, in dire straits of a pullback or some sort of a pause consolidation to unwind this overbought reading. Be very careful out there, guys. Today's going to be a real tricky day. I let the Fed announce, let the Cowboys do what they have to do today, and then let's revisit the market tomorrow. Nothing wrong with taking some quality trades this morning if you can find them. A lot of the trades have been happening, either been gapping up and literally just consolidating pretty much most of the day. So it's been a pretty boring session this week so far, at least for me. But let's just see, keep an eye on some quality stocks. Keep your stops in place here, and let's see what happens. And remember, guys, we are extremely overbought. Not saying to go out and short the market, but a hedge would be, if you're holding a bunch of longs, would definitely be prudent here at these levels. Have a great day. We'll speak to you tomorrow. Take care.